Hello friends, how are you? Vladimir here with you. This is the weekly review for the first week of May. Well, the last days of April and the beginning of May 2012. Previous week was a little bit boring. Just on Fridays we got some moves and the market went up. I believe that this up move is tricky as I don't think anything special is behind this up move, but still that's the fact, that's what we have so far. And let's get ready for the upcoming week and see our opportunities we might have. Pay attention friends that this week we will have day off on European banks and Swiss bank also on Tuesday. We can see here, right? Considered on Tuesday day off for European banks and also Switzerland bank. And on Friday we will have non-farm payroll. 2 days with some sensitivity, and we have to be careful on these days. Let's take a look on what opportunities we might have for this week. First of all, OZ Canadian. From my point of view, this is one of the best opportunities. As I see the prices, the week should open like this, some flat, maybe some down attempt during the first week, the first candles, and then the pair should make a push to around the 103 area, maybe a little bit higher than 103. We can see we have a trend line there, the daily 200 moving average, and we can see we have beautiful trend line and a resistance. If the prices push higher, from my point of view, the slope of the MACD will turn bearish, and you can confirm this potential stop by a stochastic divergence that should be created here on this area. RSI might rise a little bit higher to around the extreme, above the 70, maybe 75, closer to 80 area, should come to the extreme, and from here we should get beautiful opportunity to sell. First of all, to the 20 MA of the 4-hour chart, and then probably we will also get opportunity to go much deeper. Based to daily chart, the next stiff support area is just right here on the parity. So if it does begin a down move, the pair can go deep down. And the most important area that the pair has to hold, as I said, is a little bit higher than 103. I would say 103, 103.30, something like that. That should be the range. So this could be a beautiful sell opportunity right at the first days of the week. Euro Pound, another interesting, exciting pair. On the weekly chart, we can see that the pair builds a divergence. There is a support right now. There is a support a little bit lower around the 080. This should cause the Euro Pound to make a stop. I recommend to go as low as to the daily chart and look for a stop with daily candle patterns. The pair may go lower to go down for the 20 candles right on the Bollinger Band, to stop somewhere here around in between the 081 to 080 to create a daily candle pattern, bullish candle pattern, and then to give us a bullish up move back to 082, 1082.30 again, and maybe even higher. Remember that there is a stiff trend line here, so the prices go lower and back all the way to this trend line. So from my point of view, the next days the pair should cause a stop somewhere around bullish candle pattern, maybe extreme RSI that will be created, and we get an up move with a good opportunity for the next days. That's another beautiful opportunity you should watch for. Another important interesting thing is the pound dollar. Let's take a look. Weekly chart Bollinger Bands is broken up. If we go for duplication, it means we can go to around the 165, 166 for the pound dollar. Could it be straight? Not sure at all. I will explain why. Take a look on the daily chart. Daily chart has very stiff resistances around. This is the first one, right, that holds several times in a row. This is the next one that holds previous time as well, around the above the 163.50, and then we have one higher on the previous high around the 165, and each of that could cause the pound dollar to stop and to make several hundreds pips retrace. Why? Take a look on the pound dollar daily chart, already overbought. We have straight move from band to band, almost straight band to band. Last time it happened, pound dollar retraced all the way back to the opposite band of the Bollingers. Pay attention, right? The next important thing is the daily duplication. The pound broke the Bollinger Band and right among the duplication, right on the Bollinger Band. RSI is going straight up. If it reaches the extreme area or around the extreme area, it could be considered as a beautiful sell. If we go as low to the 4-hour charts, we can see that there is a divergence. Very beautiful divergence. So wait a little bit until the pound dollar create a stop on this area or a little bit higher to above the 163.50. It will make the stop, it will rebuild the divergence with the candle pattern, and then pound dollar is going to make all the way down, correct itself very, very strong. From my point of view, we are going to see soon a visit to this trend line. We have a trend line here, and from my point of view, pound dollar is about to stop somewhere around one of the next levels and make a beautiful, beautiful retrace of several hundreds pips down to the line. That's my opinion about the beautiful pound dollar. So look for the sell or one of the resistances. Wherever the stop happens and we have the candle pattern there, you should jump in and attack. Most recommended style of attack, investor style. For those of you who know that, for those of you who don't know it, come to the club. You will learn all there. And of course, regular style, so possible with a candle pattern as just mentioned. Dollar yen. We were waiting for this pair to begin a down move. I'm not sure if that's about to stop, as we can see a potential divergence, but as for now it's too straight, too strong down. RSI, everything strong down. Do not jump in the sell just because it might be too risky for now, but any correction up should be considered as sell opportunity as long as the pair keeps itself below 81.60 area. 81.60 area. The pair can go as to 79.50, 60 range, breaking below that, and we might open the doors all the way back to around 78 and a little bit higher area, which will meet the daily moving average, 200 moving average. So dollar yen, from my point of view, is going down to 79.50 or maybe even to 78 plus, as long as it keeps below 81.60. I am bearish. Any retrace up should be considered as sell opportunity as long as the pair is below 81.60. Australian dollar and New Zealandian dollar. Seems like the pairs want to go up. I would be careful here. I will explain why. Yes, Aussie dollar opened the Bollinger Band, and yes, it tries right now to break above this resistance. RSI broke the 50, stochastic looks good, MACD looks bullish, right? But that's exactly why I would be careful. Right, little bit higher, we have stiff, very stiff resistance area. Begins from 105.20 to 106 area. 4-hour chart, almost over extreme, overbought. From here, or one higher, the pair could make or a correction for 100 pips, something like that approximately, or begin the next crash. As long as the Australian dollar keeps to be below 106, 106.20, I would look for sell opportunities from the resistances, with the divergences, of course, right? A resistance right here around with an extreme area, a divergence that could be created, right? Look for sell opportunities. But it could be a beginning of a correction or a beginning of a crash, and next stiff down move all the way to the parity. All the way to the parity. As for now, I would be very careful for the buys. Another interesting pair to follow is New Zealandian yen. As you can see, the pair has a stop for several days. Seems like a divergence. Be careful here. Why? These are the exact situation where divergence could be broken. After such a divergence, pair normally flat up. Here, it stacks. Right? It just stack around. And if it breaks below, it should open the doors for the New Zealandian yen to go down to below 64, probably to around the 200 daily moving average, around the 63 even. Be careful. How we can know that the bullish move begins? If it will break this down move, which means break above 66.60, 66.70 range. If it places itself above it, even 66.80, if it places itself above it, then we can assume that the pair is going all the way up again. But right now, be careful, because if it does break below this 65.60, 65.70 range here, right, and close the daily chart below, it could be the trigger that the pair is moving down to 64 or even 63. Stay tuned. This is amazing opportunities from my point of view. And the last one for this week is the dollar Canadian. I think the pair is going to make duplication for daily chart, which means around 0.87, maybe a little bit higher, maybe a little bit lower. That's a range we have here, from here to here, something like that. Around this range, the 4-hour charts on the dollar Canadian should create a divergence, complete a beautiful divergence, and the pair would make the move up. 20 MA of the 4-hour charts will be target number 1, target number 2, of course, and the final area will be this resistance. Again, there is a beautiful trend line going like this. So from my point of view, dollar Canadian is about to play around to here or to here, to this area, is going to play around and then goes something like that, or from here or from here, this kind of rise. So we definitely will look for more than 100 pips up move from one of the next levels, potential levels for the stop. These are the opportunities for the upcoming week, friends. Please remember that Tuesday European banks are off on the holiday, which means the volatility is going to be much lower. On Friday there is an NFP day. We do not trade NFP day. And that's all. I wish you a beautiful week. Good luck with the trades and enjoy the rest of the weekend that we have. Thank you very much for watching this video. Yours, Vladimir.